This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on August the 4th, 2016. Our time is 8:47 Mountain. Radio show runs in Edmonton, Alberta, Canada on 630 CHED, the legendary station. And I can tell you, if you ever miss a radio show, we have them for you archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in the World Financial Report on Radio. You will find us there. And as well, we're on TuneIn, and we have our very own YouTube page. Lots of different ways to listen to us if you ever miss a show on CHED. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com, 1-800-432-1022, 1-800-432-1022, our featured diamond of the week, and it is a beauty. A .32 carat emerald cut, fancy, intense, purplish pink argyle. Coming up in the second half of the show, we will talk about diamonds, and we will give you more information on that beauty. Take a look at it at rarecoloreddiamonds.com, featured diamond of the week. As we take a time and tape today's show on a Thursday, tomorrow, Friday, is the opening ceremony of the Olympics. This morning, the breaking news was the Bank of England decided to cut rates to 0.25%, expand quantitative easing by $60 billion, and include corporate bond purchases in its easing plan. And the decision came in about 7 a.m. Eastern Time. That's 5 a.m. our time in Edmonton. The British pound dropped to 132.21 in the immediate aftermath of the announcement. They're going to be holding a press conference, but businesses in the UK are looking beyond the Bank of England and calling the Chancellor of the Exchequer, Philip Hammond, to deliver a bumper fiscal stimulus because of Brexit. We've had this in our free weekly newsletter, which you can get from Harold. We send it out via email free of charge every week, 1-800-432-1022 to receive it from Harold. A lot of Brexit stories, even in this week's newsletter. They are feeling the pain in Britain as a result of that vote. In fact, consumer confidence, the lowest in Britain since 1990. Still to come on the show after Harold's commentary, we have a very well-known bond guru saying sell everything, and another bond guru recommending real assets. Also, in the United States, home ownership the lowest since 1965. But Harold, we'll talk about that after your commentary, and here we are, another week where we're starting to see the ramifications of that Brexit vote, and you saw Britain lower interest rates, consumer confidence back to 1990. It's having some serious ramifications for Britain and potentially could spread around the world.
You bet, Randy. It's actually quite frightening. So not only did the British pound plummet after the Brexit announcement was made, I mean, it dropped by 25%. And now they lowered interest rates, which means that they're dropping their pound even further. So that's obviously a concern. What it tells me, again, is that we're going to continue to see a strong U.S. dollar. We've been getting a lot of calls. I've been getting a lot of calls personally, people asking what's going to happen with the U.S. elections and what happens if, Trump does get in. Initially, first of all, that's going to be a long shot. According to everything that I'm seeing, he's just imploding. I just don't see that the American public is going to vote a loose cannon like him. But let's say the slim chance that he does get in, initially it would be bullish for gold and probably bearish for stocks because of the unknown of what this loose cannon is going to do. U.S. dollar could possibly fall, but I highly doubt that that's going to be a major concern at this point because, again, everything that I see is that the U.S. dollar is going to continue to be the strongest currency. So the fact is that the elections, as we come closer, we'll certainly see if anything changes. But, the fact is, I know Donald Trump. I've played golf with Donald Trump. I've been to his dinners and to his club, and him and I both are on the board for the Susan G. Komen Breast Cancer Charity. And again, I would find it shocking if the American public did actually vote him in. Not that Hillary is a good choice, but there's only two choices. And the fact is that if Hillary gets in, which I truly believe she will, not that she is somebody that I would vote for, but the fact is that if she does get in, the markets will remain stable. The stock market will probably go up slightly because we already know what to expect with her. Another 4 to 8 years of what we've just been through. And even though it hasn't been fantastic, our economy, or the economy in the United States, is still much better than pretty well any other place in the world. So as we're trading today, the gold market is trading at 1363. It's made a strong rally this year. It's gone all the way from 1,050 to the highs that it's at right now. The major resistance for gold is at 1380, so we're at the very top end of the range for gold at this particular point. If we were to get two consecutive closes above 1380 in gold, then we could actually go to 14 and a quarter to 1450. However, everything that I'm seeing over the short term, and I know this goes directly against what most analysts are saying, but everything that I'm seeing is telling me that this gold market is running out of steam for the short term. One of the biggest clues, we talk about it every week, is the Commitment of Traders report, and it's the largest position in history. There's never been a larger short position ever in history than in gold and silver at this particular point. And that's something that I take very seriously because, again, as many years that I've traded the metals markets, they have always played a very pertinent role. And from my experience, in most cases, the market has fallen because of the pressure that these commercial banks are putting on the market. So even though gold could drop back down to $1,050 or $1,100 in that area, it doesn't make it bearish. The fact is that there's too many factors in the marketplace right now that are good for gold, and the major factor that is bad for gold. The major factor is the U.S. dollar, because there's a direct correlation between gold and the U.S. dollar. And when the U.S. dollar is strong, gold is weaker. What we have right now is a situation where you've got speculators coming into the market and they're bidding up the gold and silver market because they possibly see some things in the foreseeable near future that are going to be good for the gold market. And for those that do believe that Trump has a chance of getting in, they believe that the U.S. dollar will fall and gold will be a very strong investment if Trump does get in. Again, I don't think the reaction to that market is going to be as strong as everybody thinks. The other thing that is a very strong clue to me that the market is running out of steam is that the volume of trading in the futures market in gold and silver is at its highest level. It's up like 32% so far this year. So the bottom line is that when the volume of trading picks up in the futures market, in a market like gold and silver as it is right now, tells me that the general public is in the market. And when the general public gets in the market to the extent that they are right now, it generally tells me that the market is topping out. Because, and don't take this the wrong way, but the general public buys on hype and emotion. And again, that's not the way that you ever trade in these particular markets. So what I see short term is that gold is getting very top heavy. I see it coming down only because I see the U.S. dollar strengthening. If we could get an interest rate hike, and by the way, the U.S. is the only country in the world at this point here that is even considering raising interest rates. Everybody else, just like the Bank of England, is dropping their interest rates, reducing the value of their dollar. When they reduce the value of their dollar, they're reducing the value of their dollar towards against the U.S. dollar, which makes it stronger and stronger. Back in 1990, the U.S. dollar was the strongest currency. It traded at 109. I know it's a little confusing, and for those that don't understand how the currency markets work, by all means, give me a call. I'll explain it to you. But the bottom line is that in the 90s, the U.S. dollar was the strongest currency, and that's where I believe it's heading again, to right back up to the 108 to 110 level like it was in the 90s. And because the U.S. dollar was so strong, gold was at its lowest level. It was at $250. It was only in 2000 that we saw the reversal where gold went to 1900 eventually and the U.S. dollar dropped all the way down to 72.5 cents. So again, we're going to see a lot of action in the currency markets. continued, where countries continue to devalue their currency, and when they devalue their currency, they devalue it against the U.S. dollar, and that's exactly what's going on at this point. I've recommended to my clients, mostly my Canadian clients over the last 3 to 4 years, to get their dollars out of Canadian dollar-based investments, to get them into U.S. dollar-based investments. That's turned out to be a tremendous move for my clients. My clients are doing tremendously well getting paid in U.S. dollars, and a lot of my clients are making over 25% a year. In U.S. dollars, when you add in the currency exchange, it's even greater than that. So if you're not doing that, and most people aren't, we have private investment for our Canadian clients only that are doing tremendously well. And again, they all pay out in U.S. dollars, which is exactly where you want to be at this point. So right now, gold's trading at $1,363. Major resistance is at $1,380. We'd have to see 2 consecutive closes above $1,380 in order for the market to go to $1,425, $1,450 in that area. Where it's not impossible, in fact, it's very possible that it could happen. The fact is that this commitment of traders report is something that worries me tremendously. And again, the commercial banks, J.P. Morgan, Deutsche Bank, those type of banks that manipulate the gold and silver markets for the past decade or more, the fact is they're back at it again. They've got a massive short position. It's going to force the price of gold and silver down, even though the fundamentals for gold and silver are very strong right now. The fact is that there's a reason why gold's at $1,363 right now. People feel that there's huge problems in the world, and there are, and they feel that the best safe haven is to go into gold and alternative assets. And the fact is that's what we believe also. We don't day trade gold and silver. We buy it for the long term. And I do believe that over the longer term, this is going to prove to be one of the best investments we've ever made. Let's face it, the gold and silver market were the biggest bull market of all time. When we got on CHED, when Randy and I got together and started the World Financial Report, and gold was at $250, we were the laughing stock. We were the laughing stock of Canada, recommending gold at that particular point. I remember all the stockbrokers firms and all the brokers and everything out there were harassing poor Randy, saying, why in the world are you recommending gold? You're making a fool of yourself. And look where we were 10 and 13 years later. We saw a market that went from $250 all the way up to $1,900. We have clients that made multi-millions of dollars. We have clients that, small clients that put in $50,000 and ended up with $300,000, $400,000, $500,000. So the fact is that it was the biggest bull market of all time. We're going to have another one. I believe the next bull market in gold is going to take it up to $4,000 to $5,000. That's why I believe that we are going to have substantial problems moving forward. And again, we'll certainly monitor the elections and let you know what our opinions are. But at this particular point, I would be utterly shocked if Donald Trump got in. I just think that he's a total loose cannon, a fiasco that would destroy the United States and all the relations with everybody else. And as much as everybody seems to despise Hillary, at least they know what they're going to get with her. So, again, at this point, the other thing we need to talk about is oil is dropping. Oil broke $40 this week. It's right now trading at $40.80, but there's a huge glut of oil on the market. And the fact is that it looks to me like oil could drop down into the low 30s, which will affect the Canadian dollar. The Canadian dollar is tied in to the price of oil, just like the U.S. dollar is tied into the price of gold, except the relationship is the opposite. In Canada, when oil prices drop, so does the Canadian dollar. And with the Canadian dollar at 130, 131 at this point, I do believe that we could see 150 to 160 in the Canadian dollar, which means you need to get out of your Canadian dollar-based investment and get in with us. My clients are making over 25% a year, and on top of that, they're making it in U.S. dollars. If you're not doing that well, you need to give us a call. Randy, that's what's happening in the world at this particular point. Back to you.
1-800-432-1022. Call that number. Speak personally and privately with Harold. 1-800-432-1022. RareColoredDiamonds.com is Harold's website. RareColoredDiamonds.com. 1-800-432-1022. I agree with Harold. The self-sabotage that Donald Trump is purveying upon himself is stunning at this point. I think the only thing that could save him, and we have been hearing rumblings about this, of course, there was the hack of the DNC by what they say is the Russians. Well, they've been saying it for quite some time, and this is Julian Assange from WikiLeaks and Edward Snowden, who brought out the information in the past about the United States and their dealings. They supposedly have more information on Hillary Clinton. Now, if they had some big smoking gun, that may be the only thing that propelled Trump into the White House. But I agree with Harold at this point. I just don't see it. It just seems way, way too chaotic on his campaign front. Connect with Harold, speak with him personally and privately about the financial world. It's a very chaotic time. And geopolitically as well. 1-800-432-1022, the website, rarecoloreddiamonds.com. Our featured diamond of the week is a 0.32 carat emerald cut fancy intense purplish pink argyle. It is a beauty. Go and see it online. Some of the news of the week, and these men are very well known, and when they speak, the markets do listen. And they came out and spoke very, very strongly during the week. We're talking about Jeff Gundlach, who's a bond guru, and Bill Gross, another bond guru. Jeff Gundlach saying, sell everything. You heard right. Sell everything. He likes hard assets, though. And he is the chief executive of Double Line Capital. He said on Friday that many asset classes look frothy, and his firm continues to hold gold, a traditional safe haven, along with gold mining stocks, noting the recent run-up in the benchmark S&P 500, while economic growth remains weak and corporate earnings are stagnant. Now, Gundlach said that stock investors have entered a world of uber complacency. The artist Christopher Wool has a word painting, sell the house, sell the car, sell the kids. That's exactly how I feel. Sell everything. Nothing here looks good, according to Gundlach in a television and eventually a phone interview. He goes on to say that he's very, very concerned about what's happening in the financial markets, and Bill Gross agrees with him. Bill Gross saying, I don't like bonds. Most stocks, he favors real assets, as Harold does, and Harold has been recommending for a long time. Money manager Bill Gross says investors should favor gold and real estate while avoiding most stocks and bonds trading at inflated prices. I don't like bonds. I don't like most stocks. I don't like private equity. Gross runs the $1.5 billion Janus Global Unconstrained Bond Fund. He wrote in his monthly investment outlook Wednesday, real assets such as land, gold, and tangible plant and equipment at a discount are favored asset categories. The views echoed are obviously those that we just mentioned Jeff Gundlach agrees with, and Tad Revell, who's with Oak Tree Capital Group in the United States. But there you have it, two major bond fund gurus coming out saying, Jeff Gundlach and Bill Gross. Gundlach saying sell everything, Gross saying that he likes real assets. And we like real assets as well. If you would like to find out more about what Harold is recommending, speak with him personally and privately, 1-800-432-1022, 1-800-432-1022. In the Britain today, actually, off the top of the hour, we mentioned that they lowered interest rates on Thursday morning to 0.25%. Over in Australia, they lowered their interest rates to the lowest they have ever been, and that is a record low 1.5%. One of the concerns with negative interest rates is how do, with low rates and negative interest rates, which are prevalent throughout the entire world, how do banks survive? How do insurance companies survive? As they need to make money. Italy's oldest bank got a 5 billion euro rescue. They went through a stress test. They failed, and they had to be saved. They actually were given 5.6 billion US in new capital. And what they did is they took their bad loans and split them off into a separate entity. Many of the big European banks, if you did not know, have lost half their value. That's right, half their value, if not more. Many of Europe's top banks are really in negative position stock-wise. The institutions nursing some of the biggest losses are large banks like Deutsche Bank, Barclays, Credit Suisse, and Allied Irish Bank. One bank that everyone is very concerned about is Deutsche Bank, with some financial experts short that stock and some believing that they could go bankrupt or need a bailout at some point. The top bank in the Eurozone, if you can believe it, Hungary's OTP Bank, which most people probably have never heard of. Now, here in Canada, obviously, we're very proud of our Canadian banks, but rating agency DBRS keeps negative outlook on big Canadian banks as Ottawa moves ahead on bail-in regime, and we've talked about that before. With the Canadian government moving forward with plans for a bail-in regime, and if you don't understand it, give Harold a call. He'll explain it to you at 1-800-432-1022, what bail-in means. It would keep the taxpayers off the hook in the event of a bank collapse. Rating agency DBRS is maintaining its negative outlook on the country's largest banks. There's not enough information yet about how a bail-in would work to change the bank's ratings to reflect the reduced government support. DBRS said in a report published Friday, the negative trend applies to the senior and subordinate debt ratings, the Royal Bank of Canada, Toronto Dominion Bank, Bank of Nova Scotia, Bank of Montreal, and Canadian Imperial Bank of Commerce, and National Bank of Canada. It also applies to related short-term ratings that might be affected by long-term rating change, DBRS said in a report. But Harold, it's interesting to note, and we've warned, obviously, we're Canadians. I live in Edmonton. You're a Canadian living in the United States. And we've warned people that we've got to be careful about bail-ins here in Canada, and it's something that people should definitely be aware of. We have about 30 seconds left here.
You bet. Never keep more money in the bank than the insurance will cover. That's the best advice we can give you as far as dealing with the banks. The banks are not doing well. They never recovered from 2008 and 2009. And what they're doing in a lot of cases is very, very concerning. Negative interest rates charging you to keep your money in the bank is the next thing that we're going to see. We're already seeing that in Europe.
Very, very true. We had that on last week's show. There was a bank in Britain where they were going to start charging corporations, companies, to hold money in bank accounts. Crazy, but true. If you want to find out more about making money in the financial markets and the world that we're in today, definitely connect with Harold. His website, rarecoloreddiamonds.com, telephone number 1-800-432-1022. We're going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on August the 4th, Thursday, 2016. Our time is 9:12 Mountain. We usually tape in the summer on Thursdays, as Harold has business on Fridays. Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com. Our telephone number, 1-800-432-1022. Speak with Harold. We're in an environment where people wonder about a cashless society. What will it mean to them? Also, negative interest rates around the world. And you hear about people being charged to hold money in bank accounts. In Japan, safes being sold out because of negative interest rates, people taking their money out of the bank and putting it into a safe at home. It's an unprecedented time. And as you try to maneuver your way through and save money for retirement and make that money grow, you owe yourself a call to Harold to find out exactly what programs he has in place to help you grow your nest egg so you can retire comfortably. 1-800-432-1022, 1-800-432-1022, rarecoloreddiamonds.com is the website. Our featured diamond of the week is a 0.32 carat emerald cut fancy intense purplish pink argyle. And when we have auctions, and we keep an eye on the auctions overseas with Christie's and Sotheby's, purple pink argyles do very, very well. It's a very popular color, and they always really outdo the amount the estimate was given for what it potentially could sell for at auction. They always outdo that number. And Harold, the diamond that we're featuring this week is the featured diamond from rarecoloreddiamonds.com. Is an absolute beauty.
Certainly is. It's one of my favorites for several reasons. First of all, I love the pink diamonds. I love what's happening in pink diamonds, and we have a very rare opportunity in pink diamonds because, for those that don't know, that 95% of the pink diamonds in the world come from one mine. It's called the Argyle Mine in the East Kimberley district of Western Australia. And basically, this mine has been in existence since 1983, 1984. It was one of the biggest producing diamond mines in the world, producing over 30 million carats of diamonds a year. But the 30 million carats of diamonds are not what you would call investor diamonds or diamonds that you would necessarily wear. They're industrial diamonds. They're used to cut other diamonds, to make diamond bits and diamond drills and those type of things. So that's what the mine was known for. However, the phenomenon of this mine is that they produce 95% of the pink diamonds in the world. Now, this is a tiny market. There's very, very few pink diamonds that actually come out of this mine. In actual fact, they take about 55 or 60 of their best diamonds that come out each year, and they tour around the country, around the world actually. It's called the Argyle Pink Diamond Tender, and it's the biggest diamond event of the year. And basically, Argyle will take these magnificent diamonds. Now, you're not talking big diamonds. In most cases, these diamonds are a half a carat to a carat. So they're known as the most concentrated form of wealth on earth. Argyle produces 95% of them. 95% of those diamonds are under a quarter carat. So again, that's where the most concentrated form of wealth in the world comes, because these diamonds are extremely valuable, have always been valuable, and will become even more valuable because the Argyle mine is getting ready to close down. They've been in operation since 1980s. The mine is not producing anymore. The diamonds are fewer and fewer, and the fact is that they are going to close the mine before 2020, which is only 3.5 years from now. So one of the best investments that we could ever make is to buy a pink diamond from the Argyle mine, have it delivered directly to you, put it away in your safety deposit box, and just wait for the next 5 or 6 years for all the pink diamonds to run out. Now, again, you're talking about a very small number, but this is a diamond that is coveted by collectors. They're the most beautiful diamonds on earth. And again, if you just look at the featured diamond on rarecoloreddiamonds.com, you'll understand what I'm saying. So the fact is that these are known to be smaller diamonds, but again, they're just spectacular. And the fact is that they never, ever lose their value. And the closer that we're coming to the mine actually closing down, these diamonds, I believe, will take on a life of their own. I believe that some of these Argyle pinks will reach levels that have not even been anticipated before. So we're extremely excited about this because that is one of the trends that my company has jumped onto. Again, we're all about picking trends, not day trading, not picking short-term trades for our clients in, different commodities and different hard assets type of thing. These are assets that you buy and hold. That's where the major wealth comes in. You don't buy a diamond and sell it in a few years because you haven't given it enough time to go up in value. These are the type of assets that you should hold on to. These are the type of assets that if you don't need the money when you're going to retire, that you pass them on to your kids and your grandkids, because the longer you hold these diamonds, the more and more and more they go up in value. And in the case of the featured diamond, the 32-point emerald cut fancy intense purplish pink Argyle, there's a diamond that is nearly impossible to get for several reasons. Number one, as I mentioned, 95% of the Argyle pink diamonds are under a quarter carat. This is a third of a carat, so it's slightly larger. Number two is the cut of this diamond. It's extremely rare, extremely beautiful, one of my favorites of all time, also known as a step cut This is an emerald cut diamond. And just look at the video on this diamond, you'll understand why it's so valuable and so magnificent. And then you've got the color of it. There's several different colors of pink. There's several different colors of yellows and greens and oranges and all that type of thing, and blues. But the fact is, the more saturated the color, the more valuable the diamond becomes. So when you're talking about pink diamonds, there's faint pink, which you don't want to own. There's very light, which you don't want to own. There's some fancy light argyle diamonds that are very beautiful. We've had some that are really gorgeous, very soft color pink. Then you get into the more saturated colors, the fancy pink, the fancy intense pink. This is a purplish pink. It's got some purple in it, so it's got a very high saturation of color. Then you've got fancy deep pink, which can turn out to be almost red, which is one of the rarest, if not the rarest color that you can get. And then you've got vivid, which is the highest saturation of color. And a vivid pink argyle diamond is beyond rare. It's a diamond that I believe will make absolute fortunes when we auction off these diamonds, down the road type of thing. So in the world that we're living in today, where you're getting no return on your money in the bank, in actual fact, in parts of the world, you have to pay to keep your money in the bank. That's how ridiculous things are going. The Bank of England just dropped their interest rates to 0.25%. That's where Canada's is. The fact is that it's impossible to make money, no matter how much you have, by keeping it in the bank. Number one, that's not a safe thing to do because there's an insurance. In the United States, they insure your bank accounts up to $250,000. If you keep $500,000 in that bank and that bank closes down, you're going to only get back $250,000. You're going to lose the other half, the other quarter. So be very, very careful. You never want to keep more money in the bank than you need to pay bills and that type of thing, and you should look to invest your money in different areas. Now, investing in rare color diamonds, what I look at in an investment is stability, not losing my money. That's first and foremost, and then capital appreciation, making money on our investments, which most of us need to do. So the fact is that you can't make money in stocks anymore. 90% of the people that trade stocks lose. All you have to do is look at your retirement savings plan and see how your stocks and your mutual funds are doing, and you'll be shaking your head and saying that I'm 100% correct. On top of that, there's very few areas that you can make money. Not in the bank, not in the stock market, and trading commodities if you don't know what you're doing. Again, 90% of the people that trade stocks and commodities lose all their money. So what we're saying is look at alternative assets that are outside of the system, assets that are not manipulated, like the stock markets are and that type of thing, where you could wake up one morning and find out that you're totally wiped out, like we saw in 2008-9. We're saying to diversify, to own some assets that for the longer term are going to do very well for you. For those that would like to retire one day, if you've got your money in stocks and mutual funds, that's never going to happen. You need to own something of value that over the next 10 or 20 years is going to gain so much value for you, and that's where your wealth is going to come from. And that's exactly what we profess. We say to buy the type of assets that over the longer term are going to make you the money you need to retire. We all work extremely hard. We all deserve one day to be able to take a break. And with the way the world economy is going right now, that's fewer and far between. A lot of people at this point are working well into their 60s and 70s because they cannot afford to retire. But you buy a diamond. You put away, for example, an argyle pink. You spend $40,000 or $50,000 on a diamond. I know that's a lot of money and it excludes a lot of people, but the fact is that that's what an argyle pink diamond would go for, if not a lot more. Some of them sell in the millions of dollars. But the fact is, it's an asset that will never, ever drop in price, ever, because there's never going to be any more of them. And number two, they're going to increase substantially. And we only need to wait 4 or 5 years for that to happen. 3 years or so for the mine to close down. Give it a couple of years for all the diamonds to run out. And believe me, this is the biggest event in the diamond industry that we have ever seen. And if we don't take advantage of this, this is something that we are going to regret for the rest of our life. When we see what the price of these argyle pinks are going to get to, you're going to kick yourself if you're not involved in this market. The fact is, if you've got money sitting in stocks and mutual funds, get out of them. They're not making you any money. Put it into an asset that's going to give you a fighting chance to one day retire. I've mentioned this many, many times, but the longer you hold on to a diamond, the more and more and more it goes up in value. And I can pretty well assure you that even though white diamonds do not compare to colored diamonds as far as value goes, unless it's a deep, flawless, outrageous diamond, the fact is that most of us that have been married for 30, 40, 50 years, those diamonds have gone up substantially, probably more than any other investment asset that you own. So please look at the rare colored diamond market. Right now, the Argyle Pinks are the best investment diamonds that you could possibly buy because we only have 3 to 4 years till there's no more of them. And the prices, I believe, are going to go ballistic. But then, and for those that know me and have listened to my show for the last 18 years, understand that I'm all about picking trends in markets, not just individual trades, but something that's going to trend and make us a lot of money over a longer period of time. We did it with gold. We did it with silver. We bought gold at $250, rode it all the way to $1,900. Nobody else did that. We did it with silver from under $4 all the way up to $50. We rode oil from $18 to $150, and we rode the euro and all the currency markets. So it's all about trends. We started introducing Argyle Pink diamonds 10 years ago when nobody even knew what they were. Now we're only 3, 4 years away from, I think, the biggest payoff that we've ever had in an asset before. What's the next trend in assets? It's going to be orange and green diamonds. We're mining them and cutting them. They're spectacular. You can get in on the ground floor, and our clients, I believe, will make a fortune in these diamonds. So please take a look at your overall situation. If you're not happy with the way things are going for you financially and you don't see anything on the horizon that's exciting and going to bail you out of what you're in, give me an opportunity. I've been in business for over 35 years, extremely well known. My radio show's been on for almost 20 years. We've been on Fox News and Bloomberg several times in the past decade. And again, I believe that my clients do much better in the marketplace than those that trade conventional stocks, real estate, and bonds type of thing. So we're extremely excited about our programs. We have private mining programs that are available for our Canadian clients that are all based in U.S. dollar-based investments. You need to get out of Canadian dollars. If oil is going to continue to drop, which it will, the Canadian dollar is going to fall with oil, which it will and is. You need to get out of some Canadian dollars and get them working for you in U.S. dollars, and I can show you how to do that. Please give me a call. Nothing is more important to Randy and I than our clients and listeners to our radio show. Everything that we do is for our clients. Our radio show is free. Our newsletter is free. Our auctions are free. Our seminars are free. Everything that we do is to give you the information you need to make an intelligent business decision. And again, at this point, I believe that rare colored diamonds and the private investments that we're involved in are doing way better and have the best potential of any investments out there.
It was August the 9th, 2005, and here we are taping the show on August the 4th, 2016. Harold wrote in 2005, August 9th, the report that really set the course for so many people investing in colored diamonds and making so much money. Naturally fancy colored diamonds, the best kept secret. That was the article, and the website was rarecoloreddiamonds.com. It's the most secure and profitable investment, millions of years in the making diamonds. Rare colored diamonds. They're nature's art, private, portable, stable wealth. If you have not been to Harold's website, go there. It's like going to a museum online, seeing the world's most magnificent diamonds that you can invest in. And there are people that have investment portfolios in diamonds. We'll talk about that here in a second. And you can start your own today. Harold will be happy to obviously let you and help you build your own portfolio. The featured diamond of the week is a .32 carat emerald cut, fancy, intense, purplish pink Argyle. See it, rarecoloreddiamonds.com, featured diamond of the week. Get our free weekly newsletter. It's the companion to our radio show. You can go through it in minutes or spend hours. It's really up to you, but it's the companion that you want with you as you listen to the radio show. You'll see the articles that Harold and I are seeing. You'll be on the exact same page. You'll know what we're talking about. Get all the info you need from Harold at 1-800-432-1022. The call is free, and everything discussed is confidential. RareColoredDiamonds.com is the website. There was an article that came out about 6 months ago, and I thought it was worth mentioning again. It was from the New York Times, and it was called When White Diamonds Won't Cut It. And they talked about Sam, a man who owns a medical business in New Jersey, and he asked that his last name be withheld for security reasons. He amassed a collection of dozens of colored diamonds. He bought his first pink diamond in a ring as a gift for his wife in 2005. Then he bought a green diamond and realized the stones could be used to finance his children's college education. He said, I put some money into the green diamond, and that started a collecting bug, he said. Then it became trying to find some of the best examples of different colors of vivid colored diamonds. And a man by the name of Mr. Fine, he was the one that helped Sam get many of his stones, said some of his pink diamonds have doubled in value in 10 years. And obviously, timing plays a good part in that. In 2007, he purchased a half-carat vivid pink argyle diamond, and that was through the private tender, one of the best pink diamonds from the mine. But in the past couple of years, he has bid 4 times the price for a smaller pink diamond of lesser quality and lost out. And Harold has talked about that as well. Still, as with anything of beauty, you take a look at colored diamonds, and we've talked about this before. You walk into a room, people look at your diamonds. They don't do that with a bond or stock portfolio. They do that with diamonds. Sam has amassed a collection valued at $6 million of approximately 41 colored diamonds in almost every different color that you can basically get. He says, now I keep them securely in a vault, and I go down to look at them. It's a lot of concentrated wealth and a thing of great beauty. And Harold, I wanted to bring that story up again. We had it about 6 months ago. It was in the New York Times, and I thought it was worth mentioning because that's how people get started. They start with our featured diamond, the .32 carat emerald cut fancy intense purplish pink argyle. They start out, they invest in that. Then they move on, and maybe they are like Sam and decide, hey, I think I'd like to take a look at greens and oranges. Harold's recommending those as diamonds that would be perfect to look at adding to a portfolio. And then the process starts. Maybe somewhere down the line, if you're really lucky, you get into the reds and the blues, the really, really rare diamonds. Obviously, a pink argyle is a must-have, knowing what we know about the mine shutting down. But Harold, it's more than just money. It's a collection. It's a thing of beauty. It's something that you can wear going into a room, and it has just that wow factor that no other investment today on this planet has.
You're right, Randy, and he has amassed a phenomenal collection. It's just not a pink diamond. It could be a purple pink. It could be a brownish pink. It could be an orangey pink. It could be a purplish or purple pink. So there's different variations of different colors. We look at the major diamonds and colored diamonds, with red being the rarest. However, blues have made the biggest price move of any asset at any time. Back in 2005, an important vivid blue diamond sold at $200,000 a carat. Recently this year, important vivid blue diamonds sold for over $4 million a carat. That's what I call a return on investment. So you've got the red diamonds, the blue diamonds, the pink diamonds, all of them selling at records every time they tend to go to auction. Yellow diamonds have done tremendously well. Large yellows, internally flawless yellows, those type of diamonds increased by about 15%. If you look at your overall portfolio, you'd be hard-pressed to find any asset in your entire portfolio that increases by 15%. You put $20,000 into a yellow flawless diamond, 1 carat beautiful diamond, put it away in a safety deposit box for the next 10 or 20 years.